Hello everyone, my name is Rafael and I'm the Chief Market Analyst here at ROI Forecast. Today is our first video, so welcome. And we are going to be initially debunking the false Forex trading narrative and at the same time provide to you guys our main approach when it comes to the market and the analysis service that we are going to provide, right? Let's have a look. So first of all, we will discuss about the fake Forex traders, influencers, and many of those that you have seen these days. They are promoting prop firms, which for those who don't know, prop firms, they're actually operating with fake demo accounts and they really do make money from the registration fees. So to begin with, the fake forex traders and influencers, as you may have known, they do film some of their day-to-day life. They claim that trading is easy, they make quick profits, or you can see them trading from the beach or having holidays. So basically, they are looking to influence inexperienced retail traders, people that are coming to the market. They push them to believe in a false narrative, take excessive risks, or promoting to trade on highly volatile news with high risk again, and showing off fake profits. Okay, so most of them they do have demo accounts. On one account they buy, on the other account they sell, and they will show you the trade that won, that it was made as real profit. So you have to be careful when you are watching this type of people. Also, some of them they even go as far to ask people personally to trade with their money. And essentially, these type of people they have really no idea what trading is all about, and they have no idea about the financial markets in general. Now, the prop firms they have an infrastructure of demo accounts, which you are not actually trading on the real market. They are unregulated, like the my Forex fund scandal. You can have a Google, you can read about it, what happened. And basically, they are creating such rules which they're actually deemed for a high failure rate with those challenges and this type of things. Their main revenue stream is from the all of those losing traders, which they pay a registration fee to participate again and again. They target usually the people with lower income because this type of people they don't have enough funds to have a trading account, so they take advantage of giving them a hope, let's say, that they will fund them. But essentially, I don't understand why people sometimes they don't think logically, because at the end of the day, nobody is going to give you real money, okay, risk their own money for you to trade without knowing who you are and without having a track record. So, there you go. You have to think logically before you dive into any prop firm and thinking, oh, these guys will give me money and I will trade with their money. It's not going to happen. The only way you can get funded is if you qualify with a professional trading desk or a bank and you have a track record and they like your stats, then maybe yes, you can trade for somebody else's funds. But if it's a prop firm, you are trading on a fake account. And another statistic here that we are showing, and as you may have known so far, 80 to 90% of retail traders they lose money, and strangely, 90% of all the traders they are male. So when we are talking about the characteristics of a male and a female, usually women they tend to be more emotional than men, but when it comes to trading, unfortunately, men are the majority of the losing traders because of emotional trading. That's a very distinct thing that we can see in the trading industry. And this is due to, again, about being emotional and trying to get revenge of the market. So having said that, we like, to be straightforward with you guys, so you know the reality of the fake industry and what to avoid looking at. And now we're gonna see some more details here. So by default, okay, in the market you have a 50-50 chance to get the right direction of the trade. Yeah, because the market can either go up or down. So if we flip a coin, it's essentially the same thing. It will go either on heads or tails. It cannot go in between. Now, the idea and what we are looking to achieve when we are analyzing the market and trading, we want these odds not to be 50-50. We want to create and enter at a timing and environment that we believe that the odds are not 50-50 and it will be 70-30 or 80-20 in our favor, of course, right? So this is what we are looking to achieve. So another thing very important that you may have known is risk management and the position size of your trades, because you cannot have, let's say, a $10,000 account and risk 9,000 of that account in one trade, right? Because trading is not 100%. You have to have a proper risk management, decide your risk appetite, and take accordingly your position size. It's vastly important to have a plan. So you need to know where and when you enter the market and where and when you will exit. So you have to stick to that plan. You have to be patient. By that being said, you have also to have capital protection. So you will need to know, okay, here I put my stop loss and I don't touch it. You should never move your stop loss or open it up, because this can be very dangerous for your account, and the market can change the structure, and then the next thing you know, in a couple of days or weeks, your money is gone. So when you have a plan, you have to stick to it. You have to be patient, and the most important thing, you have to be dedicated. So you need to take this seriously, because the people that they don't take it seriously, they end up losing very easy. As you know, the numbers are against you, so you have to follow some rules, right? And the most important thing is you need to eliminate being emotional, because if you are emotional in this market, you see the numbers 80 to 90% of the time you will end up losing your money, if not in the first month. Between 3 to 6 months or 6 months to a year is typically the ranges that most retail traders, they blow up their accounts with one way or the other. So you should never try to take revenge if you have a losing trade. You need to be patient and wait for the next opportunity. And you need to think, of course, in the long-term approach, right? If 1 month or 1 week didn't go well, that's not a problem. You have another 11 months of the year to make it happen. So I decided to break down the year in the different time frames, and there is a reason why I'm doing that. So this is to show you how many candles are on some different time frames and understand something very important. So in 1 year, you have 12 monthly candles. In the weekly, you have 52. On the daily, 365, 2190 on the 4 hour, 8760 on the 1 hour, 17,520 on the 30 minutes, and 35,040 on 15-minute candles, and 105,120 on the 5-minute candles. So what this is telling us is, the lower the time frame you are trading and you are looking for setups, the higher the chances you end up in the wrong direction, because there are much more candles the lower the time frame goes within the year. So the lower the time frame, the more candles in the year, the more chances of you getting things wrong and end up in a losing situation. So think about it for a minute, look at the numbers, so you will understand how actual things work, and this will tell you the fake forex traders, they usually promote 5 and 15-minute charts to trade on them, and there is a good reason for that because it's a high risk time frame. So they're actually benefiting from other things other than their fake trading, of course, right? So what we're looking here at ROI forecast, we are looking to find the higher probability setups with better risk to reward ratio. And this is achievable only by defining the market cycles and dynamic, understanding how the market is moving and which will be the correlated affected pairs or instruments within that dynamic. So this is essentially, in other words, the language of the financial market, how the transactions are happening, and what those transactions are going to cause in the next cycle of the market. This is very, very important for you to know. So we are investing a lot to teach this to our members when we will be officially launched, so you can understand more about it. We are looking to allocate the possible extreme areas of the market and the timing that we will be planning to enter. This is very important because when you don't understand the cycle and the extreme areas and the timing to enter, it means you're just gambling and you're just entering randomly. You can even trade against a specific turning point of the market. So that's very dangerous. So you always have to know where we stand in the market cycle and what can be happening next. So definitely to do that, we need to avoid the market noise, which is the main media news. Most of you already know that main media and the information that you find online, it's coming from the main media. So, um, you know, if 80 to 90% of retail traders lose money, what do? They have access to this main media because it's free. So it's something that we are avoiding looking at because it's not going to give us an edge of the market. We need to forecast what is going to happen next, not what has already been happened, right? So that's the main idea. We have to understand of the time and being patient because we are looking to make more pips in the trade. So this will improve our risk to reward ratio. Having said that, as you know, from the 50-50 odds, we are looking to increase the odds in our favor by doing that and also eliminate the confusion that the market can create in the middle of a cycle with the ups and downs of a corrective structure or price action. We are looking to trade on fast impulsive moves, which they tend to start in the beginning of a cycle or within the first stages. We are looking to avoid the market traps, whether it's a bull trap or a bear trap. We have the tools that we can allocate those. And we are avoiding to trade on the lower time frames, such as 1 minute, 5 minutes, 15 minutes. And this will eliminate doing more mistakes, as I have showed you in the previous slide about the breakdown of the yearly candle counts, right? And then, of course, we need to have the right mindset and psychology, which is what we are going to be teaching and mentoring our members. So you have to think that one or two trades are not going to change your life, either positively or negatively. So don't think that you are going to make one or two good trades and you are going to double your account or you're going to make big profits. This is a big mistake that a lot of retail traders are doing, and they're actually destroying their trading accounts. So definitely, if we have a losing trade, you should not go and enter again out of the blue or do revenge trading because this is again very dangerous. And also, we are avoiding adding to losing trades. Some of the fake educators will tell you we have a good strategy which is averaging up on your losing positions. They still add more positions. So this in the long run is going to lose your account. You are going to destroy your equity curve with the risk to reward ratio. You don't have any. So actually what you are doing when you are averaging up, you are gambling, you are increasing your risk. So at the long run, you will always end up being in the losing side. We have to understand that the losses are part of trading. So nobody's 100% accurate or perfect. So that's why we have to be patient and we have to stick to a sensible risk management and having a stop loss. We have to understand very, very importantly what is the language of the market, how it tends to react with the cycles and different dynamics and the correlations. Many of the Forex traders or analysts these days, they get many things wrong, and the main reason is because they don't keep up with the recent market changes because the market is never the same. What has been happening 20 years ago, it might be very different these days. So what we are doing right here, we are working hard every year, every month. We are looking at different aspects of the market. So we keep up in case some of the things are changing. So we are always up to date and we are always evolving our view and analysis of the market. The other benefit that we will present is to the members that we will teach about having a freedom to select the instruments to trade and which to avoid. Because many traders are doing the mistake of choosing their favorite instruments and they avoid trading others. And in many cases, the market can be at a situation where your favorite instrument is not good to trade. So you need to understand that you have options. We have so many forex pairs. We have so many commodities, so many indices. So there is no reason to force to trade a specific instrument if the timing and the cycle is bad. We can just sit back, choose something else, and uh, take part of let's say a good trade and avoid being at a sideways market which will confuse you, and at the end of the day you will end up doing the mistakes you shouldn't be doing. And it's a trillions dollar market, so you cannot move it, I cannot move it. So what we have to do is become part of the move rather than trying to fight against it. Or some people, they even think that with one trade they can move the market, which is absolutely wrong, right? So more or less this is what I had to say about what we will be doing here. I will be showing some of the trades that I have taken as well personally over the last month, so you will understand more or less the way that I like to trade and I like to analyze. Of course, there are certain things that we will not be saying to the public for free. This is why next month we are launching our service. So you will have access to daily live sessions with me personally. So we will go through everything one by one. So let's have a look at a few trades. This one was Swiss yen. This trade was from last month in December. As you can see, my entry point was near the lows. I was targeting around 165.80 from 162.75, which is a little bit more than 300 pips, which I was looking to trade. My stop loss was below this low, and in this specific case, I decided in that case to move it here after the initial reaction. And as you can see, I will show you the aftermath, which was right here. You can see how nicely has pushed up from here. The other trade, it's this one which is dollar yen. I was looking to trade this up move from the corrective structure from the highs, the recent highs from 152. Obviously, in our service, you will have much more in-depth details why this specific setup was occurring. So I cannot reveal some stuff right now, as I said, but more or less is for you to get an idea how I like to trade the market and what I'm looking to my approach to the trade setups. So in this case, again, from my entry, which was about 141.73, I was looking to target 144.47, which again it's about 300 pips in this specific case. So you can see right here, how nicely it has pushed up. Easy, impulsive move again. In this case, and then the other one that we had, it was again on dollar yen. From here, sorry, this one, yeah. So from here, I was buying from here, looking for a big move towards 146, which was actually reached recently. It has ended the first cycle from the highs from 152, so I was looking for the bigger bounce, and as you can see how nicely, again, how impulsive it has moved up. Right now, as we're talking, the market has hit the 146 as well. And recently, we have shared some forecasts, including Bitcoin, which I'm just going to show you right here. This is the screenshot we have shared in Telegram recently. When the price was here, it was before the SEC was going to announce the ETF of Bitcoin. Many people are actually thinking that Bitcoin is going to go to the moon because of the ETF, but this has much more into it. It's not about news again. This is why we are paying attention to more things, and we are avoiding to watch the main media, because at the end of the day, if there is an ETF coming, it means major hedge funds and institutional traders will actually trade the ETF of Bitcoin. So for the people that think it's just something that is going to take it to the moon, obviously these type of people that you see online, the YouTubers, they have no idea what are the financial markets and what it means to be something to be issued an ETF, and which are going to be the key players trading. This has much more into it. So we have analyzed this on Telegram. Right now, Bitcoin has already dropped to 41K as we are talking. So we will wait for the market to play out, and sooner or later, in the next week or so, we will show the before and after pictures for you to see. And yeah, more or less, this is what I wanted to say for the first video. So stay connected, subscribe, and stay tuned for the next videos, which you will see much more things. And when we are ready for launch, we will be having exclusive offer for the first 20-30 members that will be joining. So you definitely do not want to miss that one. And hopefully we can help you become a successful trader and open up your eyes, give you the knowledge that most of the people you see online, they don't have, and they're just there representing something different. So yeah, that's what I wanted to say. Enjoy your weekends, and stay tuned for the next video.